Last time on Learn from the Money Masters, our celebrity investor Blair McDonough learned some big lessons about life and money.
You really need to think about changes in the industries. It's about changing and pivoting when you need to get to that end goal.
Blair's day took an unexpected turn when he met a fan who had an important life lesson to share.
I had leukemia, and I'm so thankful that Mum was able to give up her job to look after me.
Get ready to learn from the Money Masters. Today, we're taking Blair to meet Joel Fleming of UBS Asset Management Australia, one of the largest global asset management businesses in the country. UBS manages over $950 billion globally, and Joel is a master of money with more than 16 years of experience in the investment industry.
Investing is all about risk and return. There's a lot of change occurring in the economy, and we're looking for businesses that are well placed to benefit from that change, as opposed to that change being a threat. And it's not about what's happening in the next 6 or 12 months, but those things that are happening today that are going to lead to a much bigger business in the future. This is the end goal for a microcap investor. They're trying to find the very small company today that become much larger, prominent business of tomorrow. Microcaps represent the smallest companies listed on the ASX, and this is where we make our initial investment. At UBS, we've seen the pace of change increasing dramatically, and small companies are able to benefit from some of the big structural changes in the economy. Our investment philosophy is very much on long-term thinking. We're really passionate about finding great Australian companies that have a really bright future and growing with them. It's about looking through the short-term noise of the market and finding businesses that are doing things today which are going to lead to benefits in the medium term, growing profits for clients in our portfolios. I think it's important to provide people with options to help them build a financially stable future. UBS is all about providing a suite of products that tailor for the whole market, no matter what stage of retirement planning you're up to. I'd love to look back on a decade and see the fund has found the country's next generation of great Australian companies that generate great returns for the investors in our fund. And by investing in some of these growing and emerging businesses, we really think that opportunity exists.
It's time for Blair to meet Joel and learn Joel's successful way with money and growing wealth.
So we're here at Spaces, which is a co-working space in Surrey Hills, because Joel is a microcap investor, which means he's looking for the next big idea. And this is a place where the next big idea might be brewing as we speak. So microcaps, haven't talked about that before,
No.
But Joel, worthwhile telling Blair what it is you do.
Okay. Microcaps represent the smallest listed stocks on the stock exchange. So on the ASX, you've got thousands of listed companies from some of the big household names, Commonwealth Bank, Telstra, Woolworths, and a lot of investors are well exposed to this area. Outside of that, there's a really long tail of businesses doing really interesting things. And we focus on small businesses that are doing things today, which mean they can become much bigger businesses in the future.
So you're just grabbing the little guys and doing your research around what they are. And you're working off potential, or is there a formula?
Yeah, we have an investment process to help us identify those really good companies that have a lot of potential. And great management, and that's absolutely key, because with a small business, there's not layers of bureaucracy. You're really relying on the people to take that idea and turn that into something that is robust, sustainable, and the investors in our fund are able to benefit from that share price growth over time.
When you say small business, you have to be a certain size to list on the exchange.
Yes.
So give us some examples, Joel. What sort of companies are you looking at?
At UBS, we define a microcap as a business that has a market value below $250 million. And it's probably best to look back in history. If you think about where you go to look for properties, realestate.com and Domain are the businesses that you go-to these days.
Yeah.
It wasn't that long ago that you would open the Saturday paper and have a look for your next house.
How we bought our first house.
Yeah, I was just thinking about that, yeah.
And yet technology has enabled businesses like realestate.com to come up with a much better value proposition. There's more photos that you can see, there's more information, far more dynamic. And that's an example of what was once a microcap, which is now a true top 100 company, and the returns that that's generated for investors over time have been phenomenal. And these are some of the opportunities that exist. So we build a portfolio which is diversify, because that's important. You are taking on more risk in an environment where a business is starting from a low base. We're looking for real businesses that have a sensible strategy, they've got a big long-term dream of where they're trying to get to, but they understand those small steps that are required to get there along the way. You need to bring good people in to work with you, to delegate. You need to be able to continue to invest so your business can scale. So when you've won that first customer, you're able to provide that same level of support when you've got 10 and 20 and 50 customers, because these things are so important.
So are you going out to management and asking those questions and checking out the staff? I mean, do you get to know them that well?
Absolutely.
And do they do that one-on-one with you, or do you have to get in a line of fund managers who are all investing in microcaps? How does that work?
One of the great things about microcaps is there aren't 20 people out there doing it.
Oh, really?
It's a really niche area because you can't run large pools of money in this space. It's very capacity constrained. And I think over time people have stayed away because you don't have the level of broker research.
Yeah.
We spend a lot of time speaking to the customers, if we possibly can, suppliers, and building a picture, because if I'm running a business and I'm listed on the stock exchange and I own a reasonable portion of the company, I'm probably incentivised to tell you it's a great idea and you should buy my shares.
Gotcha.
I think the other thing, microcaps, some people treat them a bit like a casino.
Yeah.
They get a tip at a barbecue, it's like a tip at the races, and they go out there and they put all their money in something and maybe it works out, maybe it doesn't. But this is taking a professional approach, a long-term approach, and about backing the next generation of company.
Okay. I mean, there's a word comes to mind, and that word is patience. It feels like the future's a long time away, right? But making some decisions now around understanding and putting something into investments like these and having patience, letting the fund perform, might be an interesting way for Blair to approach.
We take a long-term view with the companies we're investing in, so you need to take a long-term view with your investment in the fund. You know, if you're someone that checks the unit price every day and worries if it goes down, then it's not the right product for you. But if you believe in the opportunity and you believe in the way that UBS goes about things, this untapped area of the market just offers so much potential, and we think the fastest growing companies are going to come from these smaller companies.
That's cool. That's very
It
cool.
is cool. All right, well, more food for thought.
Absolutely. No, it's all about learning. It's been great. Thank you very much. I'm good.
Thanks, Joel.
Thank you.
If you want to learn more with Joel, head to theinvestmentseries.com.au, where you can take Joel Fleming's masterclass or download our free ebook on becoming an investor from leading advisors. After the break, we'll put Joel's approach to the test as he pitches to the Guardians, the gatekeepers of the investment industry. Earlier, Blair had the opportunity to learn from money master Joel Fleming of UBS, a global organisation headquartered in Switzerland. Now, Joel is going to face the Guardians, the heads of the top investment research houses in the country.
Hello, Guardians. My name's Joel Fleming. I'm the portfolio manager of the UBS Microcap Fund. Today I would like to talk about the fund in the context of long-term capital growth, an increasingly rare attribute in the current environment. And this is the specific focus of the UBS Microcap Fund. I'd like to focus on two key areas: the attractiveness of the asset class as an investment and why UBS has a strong capability to deliver. Microcaps are the smallest listed stocks on the ASX, and we define a microcap as a sub $250 million market value business when we make our initial investment. The microcap opportunities that exist are often overlooked, almost invisible to most investors that aren't focused in on this area. These are dynamic companies. They cover the full spectrum of the Australian economy. And the microcap space offers investors the opportunity to uncover the next generation of successful Australian business. UBS is well placed to deliver on the microcap space. Like all professional investment managers, we have a stable team with experience who are focused on their asset class, backed up by a robust investment process. Our experienced team understands the risks and returns in this segment to allow us to make informed investment decisions and deliver returns to the unit holders. Our capability in the microcap space, combined with our experience, makes us well placed to deliver on these opportunities. Thank you.
Joel, there's a lot more small and microcap companies than there are large companies. So can you talk to us about how you identify the companies that you're going to spend your and the team's time and resources in researching in further depth?
There's over 1,000 stocks in this particular index across a broad spectrum of the Australian economy. So we know that our time needs to be targeted and focused. We start with the very basics, the annual report. What does the company do? What's its track record? Filters include screening for those core financial metrics, whether it be debt, growth, those core things that are important to our investment philosophy. And an ability just to understand, is this the kind of business that's benefiting from structural changes? Is it going to be positively benefited from the way that the world is going? These are the things that we look for.
We spoke to Blair a bit about managing expectations. If you're investing in equities, there'll be periods of ups and downs. What should he expect in terms of investing in your fund?
Well, the way we think about microcaps is we're trying to find businesses that aren't reliant on what's happening in the economy. We don't want to buy a portfolio of companies that only benefit when the Australian economy is doing well. We're seeking those businesses that are doing well outside of that because they're taking market share or they're creating a new market. So we like to think that these businesses provide some diversification from that broader equity exposure. One thing to be mindful of is it is volatile, and periods of risk off, where people are a little bit pessimistic on the share market, they often sell these smaller stocks that they consider more speculative. But that creates opportunity for a long-term portfolio manager to buy stocks with great value.
Joel, in this particular asset class, liquidity can be a concern, as we've seen in some other parts of the market. Tell us what you do to manage that potential liquidity risk.
The first thing when we designed this product is liquidity risk was key to us. So we've said that the fund's capacity is $150 million, spread between 40 to 70 stocks. That's our starting point. We never want to own too much of any one particular stock. That is one of the risks of investing in this asset class. But by having a diversified portfolio that's spread across a number of sectors and industries and businesses at different stages of development, this helps us reduce the overall liquidity risk.
So liquidity risk meaning how liquid is it? How quickly can you get your money out? Because if you own too much, then your money out, it wrecks the company. So he's saying, just own small bits so they can move in and out of positions.
Right, okay.
So given that, what do you see as the biggest potential risks for investors in your portfolio? Joel, what do you see as the biggest potential risks for investors in your portfolio?
Ooh, that's a good one.
Cutting to the chase, isn't it?
The biggest risks, I think, is at the end of the day, poor stock selection. I think that's the key risk that people face within a portfolio of microcap stocks. We try and diversify across many levels, and we run a number of stocks to help with that diversification. But you are buying small and emerging businesses. We try not to be too concentrated around one particular theme or issue that may affect a large component of the portfolio. We don't own significantly large portions of individual stocks in the portfolio, so that helps to protect against this. If you believe in the UBS investment process and its ability to take advantage of this great asset class where there is less focus by other professional investors and they're benefiting from some of the changes that are occurring in the economy, then we think that the next great Australian business does exist in this space.
Joel, the Australian Stock Exchange is dominated by banks and insurance. You spoke about greater diversification in the microcap space. Can you explain that? Is there greater industry diversification in the small end of the market?
The index is dominated by those big companies in retail, Telstra, CSL, etc. Microcaps are far more diverse. They cover every part of the economy. What we think about is the way that the world is changing. Some of these industries are ripe for disruption, and the fact that they're very concentrated, there's large profit pools there, mean that there's lots of opportunities for companies to come in and compete aggressively for that. So the diversity across the economy, I think, helps de-risk an investment in microcaps as opposed to that concentration around key industries.
So by having a number of companies in their investment, you know, everyone talks diversified portfolio, that's just picking a whole bunch of different companies and putting them together.
Yeah, right, okay.
Joel, can you talk a bit about the time frame you take when you're looking at investing in a stock, and I suppose how that translates into end investors when they're thinking about your fund, how long they need to be patient for or think about putting their money away for?
We really believe in long-term capital growth, and one of the great things about when we sit down to talk to our investors is when we're looking at a stock and analysing a stock, the next 6 and 12 months, while important, is not our real area of focus. It's where the business is going to be in year 3, 5 and 7. And so we say that given this is the kind of time horizon that we're looking at for our business investments, this is the kind of time horizon that an investor in the UBS Microcap Fund should be thinking about.
How important is it that a company is already demonstrating some ability to generate earnings, or is that not a necessary requirement?
It's not a necessary requirement, but we must see it within a reasonable time horizon.
Yeah.
We like to buy businesses that are going to create a real business within a reasonable period of time. So we look at businesses that actually have the deposit, will build the plant and will produce a commodity and deliver an economic return and value for shareholders.
What exactly is the return you're looking for in the stock you invest? Do you have a price target before you'll sell out of a stock?
We certainly have valuation discipline. When we make an assessment, we assess where we think the business is valued. So it's a constant process. As new information comes to hand, we'll update our views on valuation and its position in the portfolio. And often is the case that these businesses see a certain level of upside, and yet in time, what we're really trying to do is identify that next top 100 business. And as we go along that journey, the next realestate.com Domino's Pizza is constantly looking at that new information and assessing what that means for the value of the business.
Joel, thanks very much for the insights on your fund today.
Thank you.
Definitely is a long-term strategy, you know, if we're going to compare to, say, maybe Brad's.
Well, he's the same age as you, and he kind of said for him, you know, anyone with a young family with a longer time horizon, it's more that kind of product.
Yeah.
And I think that probably gives us a level of confidence too, right?
Definitely is a long-term strategy, you know, if we're going to compare.
Well, he's the same age as you, and he kind of said for him, you know, anyone with a young family with a longer time horizon, it's more that kind of product.
Yeah.
And I think that probably gives us a level of confidence too, right?
Yeah, it does. And that just gives me confidence in someone like Joel. And the other thing that was really interesting is just that diversity. Like there's something along the lines of around 70% is in the top 200.
Top 100.
Top 100 companies.
Value in top 100, so everyone else
Everything
is
else.
under that.
Yeah, and so there's all these thousands of companies, and that just creates the diversity that everyone keeps going on about. So I find it very, very intriguing, and it's definitely worth more research.
You know, I was thinking about you talking about when you're on television and discovering the next big movie star. You know, what he's trying to do with microcaps is discover the next big company. And whilst the Guardians correctly pointed out, you can't pick them all to be that,
No.
it is interesting to think that those micro-cap stocks could one day become the big companies in the future, and to ride that wave, that's an interesting proposition.
One of the other things I really like that he talked about is now that curve of how people accelerate in the business world now compared to probably what it was. It is so quick now. So if you've got those signals in place and you've trained yourself to recognise those attributes early, if you jump on at the right time, you could do really well.
Yeah, and he did say, look, him with a young family, this is a long-term investment. That's how he sees it, and he's got skin in the game. He's got his money in his own fund.
That is very important.
You're the same, in the same situation. You have got time on your side, and I think time is the biggest advantage of all the things I talk about, what you have to unlearn about money, taking advantage of time, and you are at that perfect age now where a few decisions you make now can really have a massive impact in 20 and 30 years. You just have to make the decision, set the strategy, and then get on with the cool things you do in your life.
Yeah. It's quite amazing. It's becoming clearer and clearer. So, yeah, we'll just have to keep working on it. And I think it's a consistency thing too. You know, you can learn this stuff in such a condensed atmosphere, but you've got to just make it more common practice.
Yeah, and I think in you meeting these guys that are managing this money and responsible for billions and seeing those guardians asking those questions, you're starting to think differently and get excited about what it could do. And this is the start of it all, right?
Yeah. It's just that education is really getting rid of the fear. And so it motivates me to learn more and more and more. And then, you know, I'll get to that position where I start. So it's just awesome to see all these guys pitching.
Yeah, exciting times for you, Blair. It's good to see you start to really get into this.
I know, I'm in.
To learn more about growing wealth outside of property, visit theinvestmentseries.com.au or download our free ebook on becoming an investor from leading advisors. Tune in next week for the finale, where Blair meets one last money master.
If you don't give yourself a safety net, you can't take those risks. But if you really know the business, you learn the secret.
And Simon reveals Blair's financial plan.
Cash reserve, expenditure, debt control. So there's lots of moving parts, and it's going to be really interesting bringing that all together and presenting it to you in the blueprint.
Remember, everyone's financial situation is different. The information in this show is not intended as personal investment advice. We encourage you to find your own personal advisor who can help you with your own financial future. Visit theinvestmentseries.com.au to find out how.